So you've probably heard about the stock to flow model, but what is it and how does it work? Today on Frugal BC, we're going to answer that very question for you. What's up, guys? Welcome back to the Frugal BC channel. I want to talk today about the stock to flow model. What is it? How does it work? And why does it matter? But before we do that, I would just really love it if you hit that like and subscribe button. It helps me out. Hit that little like, ding, and little subscribe button. You can hit the bell too if you want to get notified so you can see all our videos. Anyway, with that out of the way, let's dive into the stock to flow model. Okay, so I have pulled up the stock to flow chart. And so as we're going to talk about this in a minute, but you've probably seen this chart on other channels too. Well, what the heck does it mean? What is stock to flow? Well, stock to flow is a way of measuring an asset that has a specific type of production. So like generally a rare thing that's produced. So typically this has been used for like gold and silver and that sort of thing. You wouldn't see this used for stocks because that's not what this is for. This is for something that has a production and thus a certain type of scarcity. So let's read Glassnode Academy's definition here. So the stock to flow ratio is a popular model that assumes that scarcity drives value. That kind of makes sense, right? Like, so if you have an asset, we probably all heard of supply and demand. Well, this is the supply side. So less supply means more scarcity, which means it tends to drive the price up. So that's not, when we talk about models, you talk about assumptions because you make assumptions is how you make models of things. You can't make models without making assumptions. So just to be clear, that word assumes isn't them saying, well, it probably does. Assumes means this is the basis of their model. So just to be clear about that. Anyway, it says it is defined as the ratio of the current stock of a commodity and the flow of new production and is applied across many asset classes. So, so typically this has been used with gold. So let's look at the gold one here. I really wish it stopped popping in and out like that. But anyway, so here's mining production of gold, and then the average of gold, that's in blue, and then the gold price is in yellow. And as you can see, so it's not exact, obviously. It's not an exact science, but as you can see, they tend to generally move pretty close together. You don't have the blue up here or the yellow up here. Production, here's the flow, and here's gold following it. So what about Bitcoin? Let's go back to Bitcoin here because this is pretty interesting. I'll put you up there. Yeah, so you can see here, this is from the very, very start of Bitcoin. It was worth next to nothing. And you can see the stock flow going up and up and up. The ratio keeps improving. And like that line, that's some really tight correlation. Now, obviously, it's not exact. We definitely have periods where we have some spikes in price compared to the stock flow. And then you've had some areas where there's been dips. And our first dip here was around 2019, where it went way below that stock to flow ratio. As you can see, other than when it first started, we haven't had a lot of those dips underneath. So one could say these are good buying dips. And then we've had some spikes, of course, too. And then the recent one, and now it's up to 34. So why do we care about this? Well, it seems that Bitcoin has generally followed the stock to flow model, which means, and this predicts that, let's look at it. Let's see if I can see it. Yeah, here, and pull up a little, we have this is like 2025 or 6 right here. So according to this chart, according to the stock to flow model, by that period, one Bitcoin will be worth $1.4 million. That seems like a lot to me, and I don't know if we'll get there. It might curve underneath, but this also predicts that by early next year we'll be hitting 100,000, which is stuff that like BitBoy Crypto has been saying that. A lot of others, they're following the stock to flow model too, and it's a good chance. Now, is this a guarantee? Of course not. And a lot of people have talked about how we have price manipulation, which is pushing it down to this level. And I don't know if that's true or not. It probably is. You're getting a lot of back here. You didn't have a lot of institutional interest in Bitcoin. People kind of thumb their nose at it, but I think that it's just too big for them to ignore. Once it hit this like 60,000, people thought, wow, we really missed out because we could have bought this for way, way less. And I think Bitcoin right now is a steal based on the stock to flow model. This isn't investing advice, by the way. This is just my opinion. But I think this is why I think Bitcoin has long-term potential, because it's only growing more scarce. There's a halvening every 4 years thereabouts, whereby, and it's really based on how many blocks, but it tends to work out about every 4 years. And every time that happens, the hash rate cuts in half. You get half the Bitcoin you used to get from the same amount of work, and basically it becomes more difficult to solve them. And so it becomes more scarce. So you have built-in scarcity into Bitcoin, and that's what gives it its value. Now, there are other factors, of course, that could affect this. Will it be utilized? I think it's probably likely that Bitcoin is going to be more of a store of value, like it's going to be digital real estate or digital gold, which is funny because we just compared it to the stock to flow model for gold, and we see similar things. Like that's what we're talking about here, right? We basically have we're talking about a scarce asset. So it makes sense for Bitcoin to be a reserve currency, just like gold once was before, we went off of the gold standard, and instead we started doing all kinds of crazy stuff like printing money like mad. So that's that. And I do want to talk a little bit about my Bitcoin history, because I have been in it earlier. I know I started my channel this year, but I bought, let's see, yeah, right around here, I started buying Bitcoin and Ethereum. I bought a little of both, and it was kind of chugging along, and then all of a sudden it went bananas. So we were up to like 16, 17,000. I started seeing some very bad behavior. I started seeing people borrowing money to buy Bitcoin when it was at its peak, and I thought, you guys are nuts. Don't do it unless you have a very long-term loan and you have the ability to pay it back. In my opinion, I don't think you should put money into cryptocurrencies that you're not prepared to lose, even though I think it's unlikely that you're going to. It's not a lottery ticket. I mean, it's not like going to the casino where you're plunking your money down and it's probably going to be gone. Like you might lose some money, but it's not going to go to zero overnight. That's not going to happen. There's just too many people are interested. There's too many institutions interested in this. And when Wall Street gets behind something, you can bet that they're going to make sure it stays where it needs to be. So why would they push it down? Well, because they want to buy more so they can push this back up. So don't, be mindful of this. I think Bitcoin is a pretty safe investment, but it's volatile and you have to be ready for that. If you looked at a stock chart like this over this much time, it would not look nearly as jagged as that. But that's because Bitcoin is still a pretty new asset. Cryptocurrencies are pretty volatile. And so you have to be mindful of that when you get into them. So let's hope by this time, let's see. Yeah, we should be, according to this, we should already be, by the end of the year, yeah, we should be in the hundreds. I don't know. We'll see. I think it's going to go up. I don't know if it'll get 200, but according to the stock to flow model, it should. So that's that. But yeah, I sold. So what I should have done, I sold at the peak, pretty close to the peak on both of them. I sold out. I just got out. I was going to take profits, and I was just like, you know what? I'm taking all the profits, and it's going to crash, and I don't know what it's going to do. I wasn't aware of this chart back then. And then, kind of dipped down into this area, and this would have been a good time to rebuy, but you're never really sure about that until after the fact. Like this could have been, the signal of it just going all the way back to like $1 or something, right? But now that I'm familiar with the stock to flow model, I know that that's very unlikely, because I understand a lot more about Bitcoin and I understand the way it works. And what I should have done, even if I did take profits, I probably should have got back in. But I think Bitcoin and Ethereum are good cryptos to just buy and hold, because they're going to go up over time. Anyway, that's the stock to flow ratio. Let me go back to. So that's the stock to flow ratio. I hope you guys learned something from that. I learned a lot just kind of like digging through this stuff, because I knew a little bit about it, but I wanted to learn more so I could tell you guys about it. I think this is really useful stuff when you look at crypto and how it works. And I hope you guys learned something today. I did too. So Hey, and hit that like and subscribe button. I really appreciate that. Leave me a comment what you think. Do you believe in the stock to flow market? Do you model? Well, do you think it's good? Do you think it's valuable? Do you think it's a bunch of hocus? Let me know in the comments. I'd be curious to hear what you say. So, hey, thanks so much, guys, for watching, and we will see you next time.